All right, the market is ripping here. So the S&P 500 is up about 2.7% now, and the Nasdaq is up 3.7%, almost 4%. I'm pretty happy that we got the portfolio structured. I slimmed down on the downward bias positions, and I added to some upward bias positions. So through a combination of that, I got a pretty neutral portfolio, just taking advantage of the volatility that we're seeing. If you recall, Facebook. So they reported earnings. Apparently the market liked what they had to say. The stock is up 17.5% now, up about 31 bucks. So what we had in Facebook, we went long the puts. Now, I had been trimming as the stock has been coming lower. So I did have a remaining batch of puts going into the earnings. Didn't work out in my favor, so this morning I had to close out the entire position, or what was remaining of the position. So if you recall, we had bought the June 17th puts, 195 strike price. We bought them for 14.87, and I ended up selling them this morning for 11.81. It's about a 20% loss. But if you look at the combination, because we were taking profits on the way down, in the end, net on this entire trade, we made about 35.5%. So I rolled the dice. I took a shot, into earnings. And I saw the Alphabet, Google earnings that just weren't that strong, and I thought that might have spilled over into Facebook a little bit, which it didn't. But you take what you can get, right? I also have open this Facebook bearish call spread. Let's take a look. Meta. Calling it Facebook. It's Meta now. Meta. So by tomorrow, I need Facebook to close below 221.37, and then we'll be able to make money on that spread. Looks like it's coming in a little bit, softening from its highs of the day, so we might have a shot here for making some money. So that's the first trade I did. I took off half of NTRA. So we were long puts on this. This morning it pulled down. It's since recovered, but I decided to take off half as part of my effort to decrease my downward bias and increase my upward bias. So if you take a look at NTRA, okay. So on the 13th, we had bought the May 20 $40 puts. $40 strike price. We paid $4.20 for them, and this morning I sold half of that position for $6.25 for about a 49% return. I'm going to hold on to the other half because I still think the stock is coming in somewhat of a downtrend. If you take a look on the daily, it hasn't been able to break its 20-day moving average. Its 50-day is still sloping down hard. And if I take a look at the weekly, it tried to make a comeback but failed. So to me this still looks bearish. The 20-week has crossed the 50-week to the downside. I'm still pretty motivated to see this thing drop further. So I'm gonna keep the other half on. All right, a couple of trades today, new trades. Eli Lilly, I took a bullish call spread here, so I'm anticipating on it before the expiration that the stock will be trading north of 303.66, trading at 298.87 right now. So good day today. I just need to be trading in the green relatively quickly. So for the Lilly, the trade that I did, LLY, I sold the June 17th calls, $310 strike price. Sold them for $5.70, and I went ahead and I bought the June 17th $300 strike price for $9.36. So there's our spread, and like I said, we need this thing to be in the green on it before expiration. FMC, another bull call spread. I think that this stock on before expiration is going to be trading north of 138.45. It's trading at 134.72 right now. So for FMC, what I did this morning, so I sold June 17 calls, 145 strike price for $5.70, and I went ahead and I bought the June 17 calls, $135 strike price for $9.36. So you can see where we need to be up here in the green. Apache, APA. Let me call it APA Corp, sorry. It was Apache. APA Corp. So I did a bull call spread here. I need the stock on for expiration to be trading north of 41.08, which today it's at 41.68, so pretty good. It came down, tested this 20-day moving average right here, and bounced up pretty quick, having a really strong day today, so I feel good about this trade. What I did with APA, I sold the June 17 calls, $42.50 strike price for $2.79, and I bought the June 17 $40 strike price calls for $3.87. So having a good day today. I just needed to be up here in the green to make some money. How's it doing today? It's already up 15% from this morning, so I feel good about that. I always like when a new trade comes out of the gate with profits. Last one is Cleveland Cliff, CLF. All right. Another bullish upward bias trade. This is the bull diagonal call spread. So I'm anticipating that this thing is going to be trading north of 27.75 by the time these options start to wind down. So for the CLF, what I did here was I sold the May 20 calls, $32 strike price for 40 cents, and then I went ahead and I bought the June 17's $30 strike price for $1.50. So it's that diagonal spread, two different expiration dates. So somewhere north of here, it was lower this morning, but it seems to be coming back with the rest of the market. So I'm pretty happy about this trade. We're up 9% in it on the day so far. So that's pretty cool. I did do a couple of bear spreads because just some names look really ugly to me. The first one is Gamestop. Gamestop, I took a bearish put spread here. You see this 20-day curling over. It's may cross the 50-day. It's just had a rough time. It had this big run, and it's just had a rough time gaining any traction. So, the Reddit boys aren't getting behind this one. So what I did with that, Reddit boys and girls, sorry, the Reddit gang, the apes, right? Only the apes. All right. What I did was I sold May 20 puts, 117 strike price for $6.56, and I went ahead and I bought May 20 puts, $122 strike price for $8.49. I'm up marginally in the trade right now, but I have high hopes that this one's going to work out. Another one that I did. This is another one. I went back to the well. I think we made money with Eaton before, did we not? Eaton. Yeah, we made money with Eaton. We did spread with Eaton previously, but I'm coming back. I'm doing it again. So what did I do? All right, so I got a bearish call spread going on here. I need the stock to stay below 150, 113 for expiration. Stock is trading at around 147 right now. It is hitting, it did break its 20-day moving average today. It's having a solid day today. It's up 1.4%, which is not great considering markets are up almost 3%. But whatever, it's having a good day. It is going to hit some resistance up here by the 50. You see this 50 acted as resistance twice before. So I'm anticipating it's going to stall out somewhere below our level. So what I did here with Eaton, Yeah. Yeah, here's the previous trade. We made 47% on the trade. Nice. Nice. All right, so the new trade is going to be, I sold the May 6th calls, $150 strike price for $1.59, and then I bought the May 6th calls, which is not this Friday, not tomorrow, but the Friday after. The May 6th, I bought the May 6th calls, $155 strike price for 46 cents. So if it stays below that level, I'll be able to keep that spread. Old Dominion. Old Dominion, I got a bear put spread here. Although it's having a good day today, this is the weekly chart. It seems to have broken down, right? So here it broke through the 20 week, hit the 50 week, came up to the 20 week, couldn't break it to the upside, came down, broke through the 50 week. Right now it looks like the 20 and the 50 are about to cross to the downside. So I'm seeing some weakness coming here, the topping process. So I'm going to play this to the downside. So I need this stock on for expiration to be trading below 276.10. And it's at 293 now. I mean, it's not off to a great start, is it? All right, so let's see what I did. I sold the June 17 puts, $270 strike price for $9.80, and I bought the June 17 puts, strike price $280 for $13.40. I'm down in the trade, pretty good, down about 20%. It's really going against me, but sometimes it takes, I went out to June 17th, so I have some time. Sometimes it takes a little bit of time for these ideas to work out, which I'm fine. I'll be patient. Last trade I have is going to be Doordash. Doordash, I just went long a put. This thing, the 20 is below the 50 days, just seems to be heading lower. When are they reporting? They're going to be reporting on May 5th. May 5th, so they're reporting next week and a half or so, right? May 5th. May 5th, they're going to be reporting in a week. All right, so I went out and I went ahead and I bought puts on this. So let's see, take a look what I did. I'm anticipating a weak earnings report for this one. So we'll give it a shot. Dash. Okay, so I bought May 6th. May 5th, all right, so my options expire right after earnings. Okay, so I bought the May 6th puts, $83 strike price. I bought them for $7. I'm down in the position. They're trading around $6 right now. So I'm anticipating having some weakness as we head into earnings. I need Doordash to close below $76. $76 down here. All right, that's what we got. Thanks.